Okay, Chapter 4, Problem 6 asks us basically to do a statement of cash flows for the operating section by the indirect method. That's what that's saying when it says prepare a cash reconciliation. So that we're reconciling net cash to cash flows from operating activities. Well, if you remember from this, we talked about this in class, that what we're doing here is we're going to be looking at these accounts and seeing what happened, okay? And we're going to do that by looking at the change in cash, and it varies directly with the change in liabilities. It varies directly with the change in equities and varies inversely in the opposite direction with the change of non-cash assets. So that's the relationship we're going to be looking at again and again and again here. So we'll start with the net income of $23,300. I believe it's all in millions, but close enough. And first thing we're going to do, the easy apples, add back depreciation, amortization, or depletion. In this problem, we only have depreciation at $8,400. Let's add it back. So we add back the $8,400. Next thing we need to talk about, and I'm just going to write down the increase in accounts receivable. Accounts receivable goes up. It's a non-cash asset. It goes up. Cash goes down. Another way to think about that is if our accounts receivable went up, more people bought stuff than paid for stuff. That's what would make accounts receivable go up. Okay. Now let's see what happened to our inventory. Our inventory went down $6,100. So our cash went up $6,100. Think about it a different way. Inventory is a non-cash asset, so it varies inversely. Or more simply, when you sell inventory, you get cash. Our prepaid insurance went down. So if prepaid insurance goes down, prepaid insurance is a non-cash asset. Cash goes up $1,500. Decrease in any payable. The way you make any payable go away is to pay it. That makes your cash go down. In this case, $3,300. Decrease in salaries payable. And yes, I would go through and check them off just like I do. I'm an old-time accountant. That's called ticking and tying. Tick it off, tie it into the total. And last but not least, we have an increase in accounts payable. It's a liability. Cash goes up when a liability goes up. $900. We add that all together. Our reconciled cash balance, or our cash balance reconciled to net income, $32,300. Make sure you almost commit to memory that relationship, that formula. Cash changes directly with the change in liabilities. Cash changes directly with the change in equity, and cash changes in the opposite direction, the change of non-cash assets.